Good afternoon. Today is May 10th, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market, 21 EMA in blue, 9 EMA in cyan, 200 EMA in magenta, and we've got a MACD indicator here at the bottom. We use technical analysis, price action, overall market context in order to enter our trades. If you've been enjoying these videos lately, please take a second right now to like, subscribe to the channel, stick around for more content. Let's get right into it for today. Now, I need to start off today's video by saying this. Don't be upset by the results you didn't get from the work you did not do. We as traders cannot be getting upset about whatever strategy we're trading if we're not putting in the proper work in order to learn that specific strategy. So whether you're a scalp trader, swing trader, if you're predominantly trading failure, second entry longs, shorts, catching stop strategy, no matter what you're trading or what you're doing, if you're not putting in the effort, you cannot be mad when you don't get the results that you want. You have to put in the effort, you have to put in the hours, you have to put in the time. And that advice extends beyond trading. You can apply that outside of the stock market in your normal day-to-day lives, whether it be another hobby that you have, whether it be working out in the gym, focusing on a diet, or even a topic regarding relationships. You have to put in the work, time, effort, energy in order to get the results that you want. So today, let's really focus on the rules. Make sure that we're staying disciplined, focused, and in tune with the direction of the market so that we can focus on becoming consistently profitable in this market. As we normally do, we'll start the day marking overnight highs, the level of resistance here at the top, and marking the overnight lows, level of support down here at the bottom. Prices are trending upward, so as the morning starts, we're anticipating for market to continue working up. But we don't see that. Prices are coming back down through the 9 EMA, down through the 21 EMA. We're waiting for this 9 EMA to cross over this 21 EMA, so you're not looking to catch stops there. But if you're trading specifically Pat's strategy, you can see we have a new high here with the first entry long prices pushed down below EMA, come back up. For a second entry long that fails, you could take a failure there. So while the trade does work out, let's make sure we're understanding exactly what strategy we're using. We're not catching stops here, we're trading a failure. So with that specific strategy, maybe you're entering one tick below the signal bar, you're not putting your entry below the swing here. But regardless, that was the first trade for today. Now as prices continue to hold below EMA, they're pushing back down from above these overnight highs. Prices are holding neatly below this 21 EMA. Once you get this swing here, that's when you can draw this channel in. So you have this downtrend that's moving. And just to rewind a little bit, for the pre-market hours, you did have this uptrend working up with a break move to a new high. So this uptrend has played out. We're looking for prices to push back below the EMA, which they do, and reverse back down to the opposite end of the trading range. At least that's what we're thinking for the day. So you have this new swing up here. First entry long, prices come back down. Second entry long, if there's a trigger above this bar, and there is as this next bar forms. Now this is where I'm looking to trade a catching stop strategy. People are trying to go long here. They're trying to pick that bottom. And all I'm doing is putting my entry order one tick below this signal bar right here. So in case prices come back down, we're going to get flushed through for a scalp. As long as we don't get any bars that close above this 9 EMA, I'm keeping that entry order exactly where it's at. Now I did notice the MACD was starting to thin out a little bit, and that's what made this a little bit of an aggressive trade. Because again, you see MACD oscillating down and up, down and up, down and back up. But as it's coming back up, you just notice it's a little bit too thin here. Regardless, next bar prints, you're in this trade as prices continue pushing down for a scalp, and you would have scalped out on that trade. So I marked it aggressive just because of this reason right there. MACD was thinning out a little bit, but that's just what I saw there. Now as prices continue to move down to this 200 EMA, we have a new swing here. Prices come down for a first entry long, second entry long if there's a trigger above this bar, and there is. Now the question is, are we looking to catch stops below the signal bar? Now I didn't take this trade, but I did want to talk about it, and that's why I initially had a green arrow here. But let's talk about it for a second because there's a few clues that could keep us out of this trade. One clear thing that we can see is prices are pushing down below this 200 EMA. It's not necessarily cutting straight through. Prices are fighting here as they're trying to figure out which direction they want to go. Down here, when you're looking at the MACD, you see as prices were oscillating up and down below the zero line, you see momentum start to pick up just a little bit as prices push down. And now we're starting to lose momentum just a little bit to the short side. The next bar prints in that we have a continued loss in momentum, right, as prices are trying to push back up above the zero line. For those that decided to stay in this trade and try catching stops right here, you'd be in this trade before prices reverse and come back up to stop you out. You notice that continued loss in momentum to the short side as prices cross over looking to go back above the zero line. So let's make sure we're not ignoring the other indicators that we have that could help us filter out dangerous or somewhat aggressive trades. Now I did want to talk about this one a second. I think it's it's really important we don't neglect price action rules. We have this trend that's working down, break, looking for a new low. We shouldn't be looking for longs just yet. So I marked this again because I wanted to talk about it, but I didn't trade it. We want to wait for confirmation of new highs and lows. If we're not going to get this break in new extreme, new low, we want to at least get some sort of confirmation that prices are moving up. And as prices hold here at EMA, right after this point in time, this is where I'd look at potentially going long and catching stops. And you see that's what happens right here. We have this new swing here. First entry short, prices come up. Second entry short, so people are trying to go short here. Notice how 9 EMA is holding above the 21 EMA. MACD may be showing a little bit of a loss in momentum, but you see moving averages that are moving up above the zero line. My entry order was one tick above the signal bar that we have here. And as prices reverse, you'd be in this trade and out for a scalp as prices push up. So you definitely get that scalp before prices come back down. But make sure you're training your eyes for that. If we have a break, we're expecting the new low. Be very hesitant about trying to go long early. Wait till you get some confirmation. Because if you don't wait for confirmation, prices could just continue to push down and get that new low like we're expecting it to. All right, so this is another trade that I wanted to mark. We have this uptrend that's moving up with the break here, move to a new high. So this uptrend has played out. Additionally, we're trading up into these overnight highs. We have to be very cautious about trading long at this point. Now I marked it, but I didn't take it. I just want to make sure that, when we're following the rules, the point of the rules is to filter out bad trades. And while it's true that some aggressive trades may work, we have to try and stick with the rules as much as possible because that's what's going to keep us consistent in the long run. So we have this new swing, first entry short, second entry short if there's a trigger below this bar, and there is. So you have traps, you have shorts that are getting trapped here. Your entry would be one tick above the signal bar. And as prices come back up, you're catching all those stops and riding the momentum up. But the reason why you wouldn't be in this trade is because of this bar right here. You have a close below the 9 EMA. And according to the rules that we've established for ourselves, we're going to take our entry orders out of the market if that happens. So while the trade works this time, it doesn't mean it's going to work every time. It's important we follow the rules and pull the trade if that's what it means. Now, these rules also help us find high probability setups. Just like any strategy does, every strategy wants high probability setups. It doesn't only apply to Pat's trading rules or any other strategies that people have. It applies to all of them altogether. We're always looking for high probability setups. And rules that we establish for ourselves and that are proven to work help us get to that point. We have a new swing up here, first entry long, second entry long if there's a trigger above this bar, and there is. 9 EMA has crossed over the 21 EMA. Notice how MACD is starting to build momentum downwards as these moving averages come back down to the zero line. We're putting our entry orders one tick below this bar right here, and as prices come down, you're in this trade and out for a scalp and potential runner. Where do we anticipate prices are going to go? Prices are most likely going to find some support here at the 200 EMA. So you definitely get that scalp in there, and then if you have a runner, maybe you place it around this 200 EMA and get just a little bit more money there. But that's a trade I liked and it worked out well. Now prices came down and then they pushed back up to the EMA. We have this short-term trend that's working up with a break move to a new high, new low, first entry short, second entry short, directly off EMA. This is a clean second entry short that you could take. Price you'd be in this trade before prices come up and scare you a little bit, and then prices come back down and you're out for the scalp. Now again, we want to follow the rules to filter us out of bad trades. So, we took our order out here and we missed a good trade, but at least we were following the rules. Now here we have this new swing with the first entry long prices come down, second entry long if there's a trigger above this bar, and there is, but we have a close at the 9 EMA. If we close at the 9 EMA or above the 9 EMA, we need to pull our trade out. Otherwise, you have your entry one tick below the signal bar right here. Prices come down, get you into this trade, and then reverse and stop you out. So again, this is further confirmation. We need to follow the rules and only trade those high probability setups that are going to get us wins most of the time. The only other thing I want to mention about this trade here is notice how the MACD is thinning. Very, very small. Just stay out of those trades. This is all congestion. When you look at it, you see overlapping bars. It's better not to mess with that. So I don't mean to confuse people with the channels that I have drawn, but this is kind of what I was seeing before as the channel was in play. And as prices continue to work down, I saw a potential opportunity to take a live trade once we had this swing with the first entry long prices are coming down for a second entry long right here. So that's what I was looking at before. We'll go ahead and run the video real quick. You'll see exactly what I was thinking and how I trade these, and we'll get back right into the video. Let's see if we can get a live trade in here. It's been a few days since I've gotten the last one, so What are we looking at here? We have this new swing high, first entry long, looking for a second entry long to trigger, and then we're going to put our stop. We're going to put our stop limit order where all the stops are going to be, but we're still waiting for that second entry long to trigger. Market's just continuing to fall down. I am noticing MACD is thinning just a little bit. It was thinning in this area, but it's kind of building a little bit more momentum as time goes on. But with this catching stop strategy, all we want to do is follow the rules, find those high probability setups, and then take those trades. Market is continuing to fall here, so we have a lot of momentum. We have a lot of sellers. All we need to do is wait for those buyers to come in, trigger that second entry long, enter one tick below, because that's where people are putting their stops who are trying to go long on this. As prices come down here, get us in and out of that trade, going for 2 points, one runner. A little bit of hesitation there. But there's so much bearish momentum here, so much bearish pressure. I mean, these are the rules. MACD is short, we're already 1 point in. With my stop loss strategy in place, I put my stop one tick above the bar I entered on. We're almost there as there's more pressure coming in. Now we're break even. We got the scalp. Prices are continuing to push down. Where are prices most likely to go? Probably to this. We might find a little bit of support around this area. So I can keep my runners somewhere around there. And there's runners out. So it took a little bit of time for that trade to play out, but you see the thought process behind it. I think the only hesitation about trying to go short here is you're going short into the lows of this channel. So it does make it slightly aggressive for sure. But when you see the bearish momentum here, when you see this 9 EMA pushing nice and strongly, just count from that swing. Swing, first entry long, prices come down, second entry long, that fails. Where are people putting their stops? That's where you enter. And as prices continue to fall, you catch the stops, you ride the momentum. Prices are kind of continuing to chop along and find that level of support that was around this area. So maybe prices are stalling for a little bit before continuing. But that was an easy trade. When I look over at PNL, that trade alone, $391.84. That was a $400 trade with roughly $9 in fees. And for those that want to see the exact place that I entered on, if I turn on, I entered right here. I was out for a scalp 2 points later, and then I caught the runner here. And again, what's the thought process of the runner? It's where do we anticipate prices are going to go, and how do we find that information out? We look to the left of us. All of this is empty. All of this is empty. As we continue to push left, there was a bounce here off 200 EMA. So that's why I was thinking, okay, most likely prices are going to come around here and test this area. And you see that's exactly what's happening. Prices are finding a level of support in this area. So don't go too crazy and put your runner all the way down here, because you have a lot of support levels you need to press through. And you see that's exactly what's happening right now. Is if you were still in this runner and you had your stop all the way up here, prices find that level of support and then push back up and stop you out. So pretty clear cut. We're following the market correctly. We're analyzing price action correctly. We're closing out on those profits, and that was one trade alone. All right, now back to the video. So I hope showing a trade like that proves to be beneficial and it helps people realize exactly what I'm seeing in the moment. But you can see the trades work, and as long as you have a good stop loss strategy in place to protect yourself, you're managing a risk, you're taking high probability setups. If you do that on a consistent basis, you're going to be profitable. And I remember hearing Max say it plenty of times. You're not looking to take a large number of trades, right? These are all opportunities, but it doesn't mean we have to take all of these arrows. We just want to take the ones that are high probability and that are going to get us the scalps that we're looking for. At the time, I had a channel that was kind of extending like this. But as we started to get more price action, I started to realize, okay, well, we could have another channel at play here. And so while in the moment I thought it was a bit of an aggressive trade, when you look at it again, when you go back and look at it, post-analysis, you can see that with this other channel in play, it was probably more safer to take than we thought. But regardless, I hope that you guys find that beneficial and that you guys are able to get something from that. Now, right after I recorded that video, we had this new swing up here, right, with this new channel that's at play. Prices come down for a first entry long by one tick. Prices continue down for a second entry long if there's a trigger above this bar. And there is. People get sucked in long, trying to go long. They're trying to catch the bottom. And all we're going to do is put our entry orders one tick below this signal bar right here. So if prices fail, we're going to catch their stops and ride the momentum. You see 9 EMA is holding nice and neatly below this 21 EMA. As long as we don't have any prices that close above this 9 EMA, we're going to keep our trades in place there. Additionally, MACD is oscillating down and up. Now we're trending back down again. Next bar prints, you're in this trade and prices continue down and you're out for the scalp. That's how that strategy works. We have a short-term trend that's working up with a break move to a new high, expecting a new low for this downtrend that we have in play here. This is a lower high opportunity with a close below the EMA. For those that like trading Pat strategy, right, this is a trade that you would take. We're expecting a new low of this downtrend. We have short-term trend working up with a break move to a new high. Prices push down below EMA close, come back up to test it one more time. You're entering short here. Prices, you're in this trade before prices come up and you're stopped out of this trade. So again, not all strategies are going to work every time. The reason I'm showing this is to show you that even if you are following the rules with whatever strategy you're trading, you are going to have losses. The point is to try and minimize the losses and capitalize on our winners as much as possible. We want to be consistently profitable in this game. No strategy is perfect. Now, as prices come up, you form somewhat of a double top here. You see EMAs flattening out. So what I did was I drew a trading range in place with the midline section accommodating the EMA right in the middle of it. We have this new high as prices come down for a first entry long, and then prices come down. Nice pin bar, second entry long with room back to the EMA. I'm not necessarily used to trading these, but I did see this setup and I really liked it. I entered one tick above the signal bar. Prices came up and filled me for a scalp. Now moving along here, we had the break move to a new low, so this downtrend is played out. We have to be very hesitant about going short in these moments. We do have this new high with the first entry long, second entry long if there's a trigger above this bar. Now, I don't remember exactly how this bar formed. I'm not sure if we went down first and then up. If that was the case, you would not be in this trade. If prices went up first and you put your entry order one tick below this bar here, prices come down, you're in this trade, and you could have potentially gotten stopped out depending on how that bar formed. Because with this bar specifically, if you're putting your stop loss one tick above the bar you entered on, this bar is going to stop you out. So again, completely dependent on how the bar is formed. But the point I'm bringing this up is just be very careful about trading stuff like this. You had a break looking for that new low. We got that new low. Be careful about trading short. But as prices continue to push down, what we have is this new swing here with the first entry long, second entry long. Nice bullish bar that sucks people into the trade trying to go long. Technically, the second entry was above this bar here. So depending on how this bar formed, you'd potentially be in this trade before prices reverse and fill you for the scalp. So whether you saw it on this bar or even potentially on this bar, you'd be in and out fairly quickly. But it is slightly aggressive. Not to mention MACD is losing momentum as well. So that's why I marked it as aggressive. All right, so this is the trade that we just talked about. Now what happens is prices move down in somewhat of a channel. It's kind of hard. I don't think it's being confirmed necessarily, but you do have a break of this downtrend looking for a new low, and it finds that low. So this downtrend has played out. Prices push back up to find a level of resistance here at the top, and then prices start oscillating up and down above this EMA. So I drew in this trading range. I didn't see any opportunities to take a catching loss strategy in here. I guess if you're really trying to find trades, you have this third touch of the support down here. Prices come up for a first entry short, and then prices come back up second entry short. You have room to the EMA. This could be an aggressive trade you take, but I haven't been training my eyes to see stuff like that. I'm looking to catch stops, and that's what I was able to find right here. So we have this new low. First entry short as prices continue pushing back up above the EMA, second entry short if there's a trigger below this bar. And so this next bar formed, prices had pushed down first before they reversed. I had my entry one tick above this bar specifically. Some people could put their entry orders one tick above this bar because that's technically the swing, but I was just worried about continuing to trade up into the highs. I wanted to make sure I had enough room to get out. So that's the way I entered it. You see the momentum of MACD also picking up a bit. We have plenty of room to the highs. I entered that trade, got the scalp and a quick runner as well. And where do we expect prices to go? Up to find a level of resistance here at 200 EMA. Now, when we're in a trading range, what do we expect for prices to do? We expect them to go from the highs to the lows, back high, low, oscillating up and down below the EMA. So after we get this failed breakout, I was looking for reasons to go short. As you can see, we're waiting for 9 EMA to cross over the 21 EMA, and it does. MACD is showing nice bearish momentum. We have a new high for the swing here. First entry long, prices come down. Second entry long, if there's a trigger above this bar. And there is very nice trapping all these longs into the trade. I had my entry order one tick below the signal bar. Next bar prints, nice bearish bar. My entry order is still in place here. I'm ready to catch the scalp and ride prices right back down to where we expect them to go. This next bar forms, I get sucked into the trade. My stop loss is going one tick above the bar I entered on, and as prices reverse back up, I get stopped out of the trade. This was a very unfortunate loss. But again, in any strategy you trade, sometimes you're going to run into that issue. I really like this trade. I was kind of bummed out about it. The next bar prints and prices go exactly where we expect them to go. So we just got really unfortunate there, but we read the market correctly. We entered the way we normally do with our stops. It was very hard to filter out that trade. That just happens sometimes. Prices are moving down, break of the short-term trend, looking for a new low, and we get that. So now we're looking for prices to reverse back up to the top of this trading range. Now we had another trade setting up here, but we had to remove our order. We had this new swing with the first entry short, prices come up, second entry short. So you have people that are trapped trying to go short. I had my entry order one tick above the signal bar here, but as soon as we get this bar, it closed below the 9 EMA. I had to take my order out. And when we follow the rules, you see what happens. If my order is one tick above this signal bar right here, this bar would have gotten me into the trade, came back to stop me out because my stop loss is going one tick below the signal bar, and then prices go exactly where we think they're going to go. So that's the whole reason why we have to follow the rules, because sometimes trades will work, sometimes trades won't. We just have to try and be as disciplined as we can. I didn't end up taking this last one, but you could mark it as aggressive. You have the new high here with the first entry long. Prices are coming down for a second entry long. Plenty of room back to the EMA. Finding a level of support down here that's pretty well established with prices touching that area. So second entry long, buying low, selling high, plenty of room to the EMA. You could be in and out for a scalp fairly quickly. But again, I haven't been training my eyes to see that and take trades like that right now. I'm just focused on a different strategy. So now prices continue to chop along before pushing strongly up. I kind of mentioned it earlier in the video, but once we made it to the top of this range up here, where did we anticipate prices to go? Back down to the bottom of the range, and that's exactly what happens. When you extend the overnight highs and overnight lows, prices push back up trying to reach the top, can't make it, and now we're just oscillating up and down near the midsection of this trading day. But yeah, there are plenty of other opportunities. Even post-analysis, you can see you can catch a stop right here very easily in and out of this trade. When you see trends like this, it's a great time to catch stops and just help ease the pain for the people that are trying to pick tops. But I hope that you guys found this video beneficial. I always enjoy making them. Leave a comment, let me know what you're thinking about these videos, how they have proved to be beneficial for you. And that's all I got for today. I will see you guys tomorrow.